All right, so let's talk about the correct way to scalping pullbacks when trading the NASDAQ, or in particular, any future market that you have interest in actually trading. I always talk about this. You have to get the actual direction of the market right the first time around, okay? Meaning you need to understand the structure of the market and which way the market's moving. Are we bullish to the upside or bearish to the downside? This is just going to be a quick video, showing you, just kind of looking at the structure of the market, but showing you if we get the structure right, how we can identify quality pullback zones covering supply and demand in which we can actually trade. So first, what we want to do, I'm going to go ahead and jump into it, is look to see, are we moving higher, breaking structure, making higher highs and higher lows, or are we moving lower and breaking structure lower to the downside, okay? So if we look here from November the 10th and moving forward, I mean, we've been pushing lower, okay? It all started really right here when the market showed its signs where it wicked right here, came up, wicked again. It broke above there, but it came up here and it made this high here, and then it turned around and started pushing lower. Now, the signs of the market where it's actually going to appear that it could be trying to reverse is where you start to see the first break of structure below, meaning right below this area here. So you get a low, a lower high, okay, that's not higher, that doesn't break this high here, but makes a lower high and then a lower low. So we got a structural break here to the downside, but we also got a structural break here to the downside just as well. So that's going to be an indication, and I've shared this pattern time and time again, where you want to pay attention to, like if the market's making higher highs and higher lows to the upside, and then you get the first, say, a break right here, making it a low and then a lower high, and then where it breaks structure like right here and right here, that's a sign. We made the first low, lower high, okay? We broke the low here. First indication that we're starting to possibly reverse with the first bearish push to the downside and then another structural break. So those are two areas in which the market's breaking structure lower. That's going to tell us that the market is trending to or reversing to the downside. So when it does that, okay, we get the break here. You can look for to actually go short at areas of, say, supply resting above. But just be careful, according to what time of day it is as well. Like, yes, the market pulled back here. This was an area of supply right here pushing to the downside, but this was getting close towards the let's see here, towards the end of the day. But anyways, the market tapped the area. It did reject it before breaking higher and then grabbing liquidity on the top end, and then it took out liquidity. I talked about this in, I think, yesterday's video covering that liquidity grab video, and I did that a few times. But as you can see, the market made lower highs and making lower lows, and then it was pulling back and goes back up, basically making, after making this low right here. So it's making these breaking structure lower. It goes back up, building basically an area of resistance here at the top. Market comes back up, grabs this area of liquidity, all this, resistance here at the top. And it flushes to the downside here. Now, right here, as you can see, where the market made a low, lower high, came back. On this leg where it pushed back up to the upside here, there was a bit of structure that broke to the upside. But this right here, as you can see, is an area, this would be like a minor structure break back to the downside if the market comes back and breaks below that. It did. It is still considered an area of structure that's being broken to the downside, and then it pulls back, creating this area of supply resting right here. But you gotta be careful. I talked about this in the prior video. This is a double bottom. When you see double bottoms and double tops, the market most time is, if it's not going to break through this low here, then it's going to go back up searching for higher areas, okay? So after it made this low right here, and then it started running back to the upside, push up, pull back, broke structure. It came back, broke below this area structure, double bottom. This is an area of supply. You can look for a quick scalp, but be mindful what just happened below that double bottom. So you have to be able to pay close attention to price action. In reference to following the structure. Structure is to the downside. Yes, it is. We can see it clearly making these lower lows and lower highs until it gets to this point here, makes a low, comes back, doesn't break any highs here, comes back, makes a double bottom, just to go back up to search and start taking out highs above, which is liquidity. And then what's it going to do? Well, now we got liquidity here forms to the bottom where it starts to move lower and take out the lows down here. Now at that point there, most times where you see where we are grabbing liquidity, say for example, if this liquidity is formed here at the top. Okay, it comes up there, it grabs it, and there's liquidity at the bottom. It's going to run the lows and grab that area of liquidity just as well. All right, so you have to be, pay attention to things like that. So moving on, at that point, we started grab liquidity, came down here, took the lows out. Then we started breaking structure lower to the downside, creating or leaving behind key areas of supply. So if the market's moving lower and breaking structure, then we just want to look for opportunities and where we can take pullbacks to key areas of supply and look for opportunity to go short with the overall trend of the market. And at this point, as you can see, once we take out this area of liquidity, what happens? We come down, take that area out. We're below the VWAP. So if we're below the VWAP, that's a strong indication that, there's volume. That's the volume weighted average price indicator. The market is staying below the VWAP and it's breaking structure lower and pulling back the key areas of supply. Then we just look for opportunities to go short. Pull back right here, key area of supply, break structure, pull back. You can look for it to go short here again, and go short. Now, I'm not taking trades directly off the 120, but I'm showing you overall when it comes to scalping the actual market, in reference to the direction, according to market structure, what we should be looking for. The picture is being painted. Okay, the market is making lower lows and lower highs, even though it's kind of not say ranging, but all it's doing is kind of moving sideways here in a sense. Even though we're making lower lows, it's not making higher. It's slightly making higher highs. But they're really not higher highs in the sense of they're not closing with a candle and closing above with a strong bullish candle to the upside. They're going up there and wicking like they did on this bearish candle. They wicked above here, came back up, wicked above here, moving lower. So the sentiment is still to the downside. And as we continue to push lower, and breaking structure lower, all we're doing is looking for opportunities to pull back the key areas of supply to go short. So push down here, came back, push down, came back. All right, and then it came back down below this area here, and it broke structure below this area here. It came back, look for opportunity to supply. So there was 1, 2, 3 areas of supply. Now again, I'm not taking my trades. So this was on the 14th. This was at 11:25 or 11:45. Right here, I do recall that when it tapped here at right here about 11 o'clock, there wasn't a zone within a zone, meaning a smaller zone on the lower base chart. And that's what I do. Once I've marked off and I first identify structure, looking at price action, looking at the activity of the market, I will mark my zones according to what structure is doing. If we're breaking structure to the downside, then I'll mark a supply zone. If we're breaking structure to the upside, I'll mark my demand zones. But when the market and the sentiment is pushing lower here, this is the first area of supply right here. Again, like I said, 11 o'clock here around this time. If I move down to the 24 range chart, I didn't notice where there was a smaller zone within the higher base zone. This is the higher base zone I drawn. So then you can wait for the market to basically continue tapping back into the zone here, because this is still a high probability area of supply. In this case here, we're just looking to see if it's going to tap into a lower base zone. So I marked the zone off my 120 range, and then I'm looking for it to pull back to a 24 range supply zone. So it's a zone within a zone. Okay, and I'll show you real quick, just moving down. So as you can see here, I was talking about the zone within the zone. That larger zone is the 120 range supply zone that I have marked up. When the market pulled back here, it tapped the higher base zone, but it didn't tap. It didn't tap into a 24 range. I'm on my entry chart now, which is my lower base chart. There wasn't a zone right there. So it did reject here, and it came back up and tested this zone right here, okay, inside the higher base zone. At that point there, once it's tapped the lower base zone off the 24 range chart that I marked up on the lower base zone, and we're inside of the 120 range zone, then all I'm doing is looking for the market to react, either getting aggressive with the break and the close of the candle somewhere around here about 134, or wait for the break and close of the candle below, which would be the body closing below the last up bullish candle here at 21,129 and going short. All right. So if we look back over at the higher base chart, it taps right here. Once we tap there and we get the rejection on the 24 range, then I'm just looking for gaps to be filled back to the downside and possibly run this area or this low right here. Okay. And as you can see, it comes back for the gaps here to the left, and it also closes below and takes out liquidity, or takes out that low right there, pushes lower. this is a structure break, okay? There's a structure break, and then it pulls back right here to this area, which is now another area of supply resting here around at 1247 on the same day. As you can see here, if I move down to the lower base chart, this is that time period around 1247, 1250 on the lower base chart. Higher base zone is marked there. There's no zone within the zone, okay? So the market reacts and rejects here. If we go back and look to see what took place on the higher base chart, blow it up a little bit. It reacts right here. It comes down. We don't make a new low here. We don't break below and close below this low here. So it comes down, basically just swiping this area of this low here with liquidity and pulling back to the upside. When I see things like this right here, this is just kind of like support being built up at the bottom right here. So if it's not going to take this low out, then it's going to go back up. So when it does go back up, I'm going to be very mindful about taking any trades going short back down, especially where we didn't take out this low right here, because the possibility that it may want to continue pushing higher. So you have to be very mindful. If it's testing a low again and doesn't break and close, but comes back up and it tests the higher base supply zone again, and then it may tap into a lower base zone, which could have been this zone right here on the inside. Be careful about trading those areas right there, because the market just showed its hand on the higher base chart that it did what? It didn't want to go lower. So I'm going to be very mindful when I see things like that taking place. So in this case here, I'll pass upon that opportunity right there. And as you can see, it goes up and it breaks above that zone there. After coming down here, testing it again. It broke to that zone, so it's invalid on the higher base chart. It comes back lower, and then it breaks structure below here. It breaks below these lows here, creates an area of supply right here off the higher base chart. Go down to the lower base chart. This was at probably moving close towards the let's say 310, 320 area, 310, 320 time frame. The first tap was right here, as you can see back on the lower base chart. So we marked up the zone on the higher base 120. The lower base 24, the first tap is right here, but there was no high probability supply zone. There was one resting right here, and as you see, when it tapped it, it came back. Okay, it did come back here. It didn't break below here. It kind of just made pretty much a double bottom right there, which I like, because the fact is that when it tested the zone the first time, came back, made a double bottom pretty much right here. I like that, because now it's creating liquidity on the bottom end, in which the market may want to pursue and go after. So when it comes back up, we finally test and tap into a supply zone right here. It's untapped, which means that there's a gap back at it, which increases my chances and probability the market may work in my favor. So we tap into the higher base zone, tap into the lower base 24 range supply zone just as well. And we get either going aggressive here at 21,036 or wait for the break and close of the candle somewhere down here around 28, 27 or whatever. And then you can look to take a shot going short. Again, if you got in here, let's say around, let's say right here at 30, okay? The market comes down. It does pull back some. Your stop's going to go on the back end here right at 21,042, okay? So at the point where the market taps the 24 range zone, you get the rejection and the break and close of the candle. That's where you go short. Stop goes on the back end here at 42. Give yourself a few points breathing room above that area, because the market likes to push down and pull back sometimes and test it tick to tick. In this case here, you see if you got into the trade around about 31, it came all the way back to 35 and then went down. So if we got in here at 31, it went all the way down here to say 21,006. Okay, basically what it's doing is trying to come down and fill these gaps coming back down to the downside, and that's what we're aiming for, and possibly try to also take out lows or areas of liquidity that may be resting below. As you can see, it comes down, takes out liquidity here and runs that low right there. So this right here was a very good solid trade setup around about 315, 320 on what day was that? I think it was the 15th or the 14th. Okay, so you have multiple times in which you can look for opportunities to go short, but I'm showing you how you could scalp. Use this on scalping pullbacks on the NASDAQ futures, the E-minis going to the downside. And you can do it on the micros too, but just pay attention first and foremost to the structure of the market, whether we move it to the upside or downside. And when we move it to the upside, it's just in reverse of. We're looking for demand setups on pullbacks, scalping them, going back up, okay? But that's all I want to do is share that with you guys today. I appreciate everyone that tunes in on the daily watching the videos. If you aren't a current subscriber, please take the time to go ahead, click the sub button right now to subscribe to the channel. And make sure to turn your post notifications on as well, so you do not miss any of the uploads. Now, to anyone who's interested in becoming an elite member, because I always get that question about, how do I become an elite member and gain access to the trade breakdowns, the video playlist of materials, and as well as the great video that I covered on market structure. All you got to do is scroll down to the description portion of the video. You're going to see two links. The first one is the Discord for anyone who wants to join. The second one is the link where it says become an elite member. You click on that, 2 tiers will pop up for a very inexpensive fee. Very inexpensive, for only $6.99, and it could be life changing for you, especially if you learn how to trade the right way and the strategy. Very inexpensive, for only $6.99. You gain access to all that additional private community trade content. And if you watch those videos on how I break those trades down, talking about market structure, and there's tons of trade breakdown videos on there talking about market structure, talking about where to place your stop loss, talking about where to place your profit targets at, just going in detail about my mindset of what I was thinking before I took those trades and while I was in the trade, okay? So it's as if you're sitting next to me and I'm showing you and walking you through trade setups one after another, okay? So it's very inexpensive, only $6.99. Again, click on that link. Choose the second tier for $6.99 and you'll have access. Outside of that, that's all I have for you guys today. I appreciate you for tuning in this weekend. I hope everyone is having a fabulous weekend. And do me the biggest favor, before you actually click off this video, make sure to click that thumbs up button. Please like the video for me if you found value in today's content. Take care. See you in the next one.